Well, we always say retirement is a journey, one that you shouldn't have to navigate solo. So that is why every week here on The Right Path to Retirement, we turn to financial advisor Jimmy Lin, certified financial planner and the founder of Right Path Wealth Management right here in Las Vegas. So, Jimmy, that refund could be more than just extra money. It could be a strategic move that helps people out later on, especially when taxes become a bigger piece of retirement. But here's where a lot of people get stuck. Even if they want to do the right thing, they're looking at this market and they're thinking, is now really the time for me to invest more? Which kind of brings us to something I found interesting, because most of us are just regular people with a 401k trying to make the right decisions for our retirement. And there was a new study by Albright Solutions that says that us regular folks with the 401ks see this economy differently than those on Wall Street. It found that people who are frequently buying and selling stocks, they are plowing money into the market. But us retirement savers, we are currently moving in the other direction towards cash, bonds, fixed income. So, Jimmy, for those of us running for safety, I'm wondering if you think we're being smart or maybe we're missing out on a big opportunity. What are your thoughts?
Well, I think we're being human, and there's nothing wrong with that. You know, we see what's going on in the world, and quite frankly, you know, it is scary. And it's funny, I actually had a conversation with one of our clients yesterday about this because he onboarded with us, and we put a portion of money in an area that's safe, like a fixed index annuity. We've talked about that before, that cannot lose value. But he said, you know, for the portion that's going into the market, you know, he wants to kind of figure out, like, can we wait a little bit? Can we time it a little bit? Because he's seeing what's going on in the world, and we both kind of agree that the market and the world are not aligned. You know, around the world, you know, cities are on fire, and we see just a lot of instability. But then the stock market's still going up. You know, we see people not being able to afford their groceries, and their salaries are not keeping up with inflation, but the stock market keeps going up. So a lot of times it doesn't make sense for people, which is totally understandable because things don't feel aligned. The market doesn't seem aligned with what's going on in Main Street. What I would say is you have to have a strategy in place. So like for this gentleman, you know, we definitely put a portion of his assets in a place that couldn't lose money, but could still have some opportunity for decent growth. We put a portion of their assets into what we've talked about before, which is a structured note, where if the market actually does correct and go down in value, there's opportunities where in some instances our clients can get a plus 20% in a down market. Now it's going to change situationally based on when you get one of these, but there's examples of where there's strategies based on, you know, the instability that some of us view in the market. Now, I'm a big believer in the market long term. So whatever we put invested in the market, whether it's stocks or bonds, we do want to have an eye for long-term growth. You know, try to have that uninterrupted. So it's just about creating these different buckets, having a purpose for every bucket, you know, a strategy. Don't let your advisor just tell you you're going to be put in a cookie cutter 60-40 portfolio and, you know, it's worked over time, so it'll work again. Because in retirement, you can't have that situation where you had that bad luck of it just happened to not work during your retirement because you only have one retirement. So I say that people have, you know, are right to be a little bit nervous. But if you have a plan and you understand that portions of your money are protected, portions of your money could benefit from downside risk, and then the other portion of your money can actually take advantage of this crazy market that we still see, then you're going to sleep better at night because you actually have a kind of clear plan in place and understanding of what your investment strategy is.
If a client comes to you, how do you kind of help them tell the difference between maybe a smart defensive move or if they're making one based off of just pure emotion? How do you help them through a circumstance like that?
We talk it through, and that's really where an advisor comes into play. Is a lot of the value we have is not just about, you know, putting people in investments or products, but actually painting a clear picture of let's be goal based. Like, what is our goal? And what assets are we working with? Because I don't want people investing in high risk, you know, investments if there's no real purpose for that. You know, some people are just chasing gains just for the sake of chasing gains. But if the market get cut in half, they would be emotionally distraught. So it's really talking through like what are our ultimate goals. That's what we like to be our firm is we're very goal based and we're very planning based. Like we like to map out what your life is going to look like over the next 20, 30 years based on all market conditions. And so I think that when we're able to break down the investments into just being tools of achieving a goal, then it'll make sense. Like they'll know that sometimes we have to have a hammer in our portfolio that may be going for market growth. But sometimes, I don't know what the opposite of a hammer is, but maybe a screwdriver, right? For something really, really smaller. So that could be like those bonds and fixed incomes. Like we're not always trying to hit home runs, and being able to kind of paint that picture for our clients can help them ease that anxiety that we all have.
I always like to advocate for our listeners. So, and I think we probably have a lot of listeners right now who feel nervous about the market. So I'm wondering if you can go into more detail about some of the key questions that they should be asking themselves to figure out whether their fear is based on real risk or maybe just the headlines of the moment. I know you mentioned, what are your goals? What your goals are. That's what we need to define. Are there any more questions that we need to boom, 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 go down the checklist and ask ourselves to kind of get a better idea of, is this based on some real risk, or are we just kind of reacting to what we're seeing in the headlines?
Yeah, the headlines are scary. We see, wars going on. We see oil being disrupted, which basically is the engine that runs our economy. And so the questions that they come in with are like, is the world going to be okay? Am I going to put my money into the market and then everything tanks? And so we have to talk through that and understand that, okay, let's break down what our income needs are going to be over the next 10 years. We have to understand, where is our current income coming from? We have some fixed income, whether it be just our Social Security, maybe a pension. What do we need to spend? What are our debt obligations? When we start breaking down what we actually need and then what additional income we need from our portfolios, we got to make sure that the things that we need in the next 5 years, let's say, are in a place that really has very little chance of losing money. And so once we explain to them, look, no matter what happens to the world, your next 5 years, or if their comfort level is 10 years, your next 5 to 10 years is covered no matter what goes on in the world. And if we can agree that you're covered here, do you think that in 10 years, the market's not going to be higher? Most people will understand that in the long term, no matter what's going on in the world, history has shown that the markets are resilient, because companies will figure out a way to make money in any market condition. They will adapt because that's how companies work, is they're profit centers. So the markets will chase those companies, and we'll see gains in the market. But you have to have a long-term view. So if we're able to talk our clients into understanding that we know there's a lot of fear out here, but you're going to be okay because we're planning either for the next 5 or 10 years, whatever your comfort level is, where this money is going to be that bridge. So anything we have in the market is really things that we need in 10 plus years. And if you believe in the market, if you have $1 in the market, it's because you believe in it. You know that if you give market a 10, 15-year period, virtually nothing grows better. So painting that picture of getting some more clarity helps them understand and ease that anxiety.
Is there a scenario where playing it safe can actually start to work against you long term?
It can, because if you're playing it safe and inflation continues to go higher, then you're not growing your money to keep up with inflation. And at some point, those medical bills, which medical bills typically, healthcare bills typically inflate at double the rate of normal inflation. So you may see yourself, if you're not proactively growing your assets, at least to outpace inflation, you're going to find yourself in a situation 20 years from now, or 15 years from now, when things cost more. A loaf of bread costs more. Going to the doctor costs more. Putting gas in your vehicle costs more. All of these things, your dollar is not going to be as valuable. So we have to be strategic about this to make sure that, we're not going to, it's not about being okay in the next 2 to 3 years. With our relationships with our clients, we're looking at relationships that span 20 or 30 years. And so we have to make sure that in 20 or 30 years, our clients' income is still going to be able to sustain their current lifestyle. But everything costs more. Everything in 20 to 30 years is going to cost more. And if we're not trying to keep up with inflation through our investments, then we can get ourselves in trouble as far as being able to afford things like our healthcare.
Jimmy, thank you so much, as always, for breaking it all down for us today. You and I will be back next week, same time, same place, with more retirement insight for Las Vegas. But until then, I'm going to hand it back over to you to take us out.
Yeah, it was fun, Casey, as usual. And for all the listeners out there, you only have one retirement, so give us a call. We'd love to get you on that right path.
That is going to do it for us this week. We will be back next week, same time, same place, with more great insight from certified financial planner Jimmy Lin here on the right path to retirement. Take care.
Insurance products are offered through the insurance business Right Path Wealth Management. Right Path Wealth Management is also an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Right Path Wealth Management are not subject to investment advisory requirements. Investing involves risk, including potential loss of principal. Any reference to the protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying ability of the issuing carrier. This radio podcast is intended for informational purposes only. It's not intended to be used as the sole basis for financial decision, nor should it be construed as advice designed to meet the particular needs of an individual situation. Right Path Wealth Management is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Right Path Wealth Management.
Market Guard is a firm that provides investment signals as well as portfolio allocation recommendations, wide variety of model portfolios. Market Guard does not offer advice or enter into fiduciary relationships.